session. It's sponsored by Bear Crop Science. And our final speaker is Angie Setzer. She's the Vice President of Grain for Citizens out of Charlotte, Michigan. And she will be bringing our insights on the current grain market. So take it away, Angie.
Unmuted and turn on the video. All right. We are cooking with gas. So we're going to go ahead and get started and get our screen sharing going on. They're getting a container truck out for me here at the elevator. So you're in luck that you aren't going to hear that. Get around. Oh, the host has disabled my screen sharing. So I'm going to have them get that started if we can. Let's see. All right, let's try that again. All right. There we go. All right, let's go ahead and get screen 2 shared here and get started. All right, I'm gonna make sure that you guys can see that hopefully. So we're gonna get rolling here. If you can't see it, let me know because I can't. Let me try this. So we're going to go ahead and get started. I'm Angie Setzer with Citizen Grain in Charlotte, Michigan. Work with a lot of farmers throughout the state into Ontario. I won't even say that we ship a lot of corn into Ontario because I know that can be a sensitive subject, but I want to talk today about marketing in an unexpected bull market, right? We're kind of in that sort of situation here where maybe didn't expect to end up where we are today. So I want to make sure that we're keeping focus and maintaining profitability. And so what a difference a year makes. 2020 was a year we will remember forever for all kinds of reasons. It was the first time and hopefully the last time that we will experience a global pandemic. Absolutely no guidebook for that. I looked, there's nothing that you can get on Amazon that will help you learn how to manage any sort of agricultural operation through a pandemic. Maybe now we should start writing one, but it started with hope. A lot of 2020 was that we were going to really see a lot of really good things happen, spilled over into fear. I'll never forget some of the conversations that we were having with my hog feeders, with my grain farmers, March, April, May timeframe. And then we ended with contract highs. Who would have thought? So a year ago, I was giving these presentations trying to figure out how to be upbeat. What can I say, that's going to allow people to listen and not really walk away absolutely depressed. And so China, obviously was practically non-existent as a buyer in the US markets. Now the Canadian setup, there was some back and forth a little bit. Obviously, once we got into that Huawei technology or the higher up in that position, and once the US kind of got on Canada to do some work with us, we really were, looking at seeing, I'm not sure if this isn't working, I just got a text message, but so we were really kind of working with China. It didn't look like China was going to be coming back in anytime soon. And so the USDA numbers at the time indicated that the 2019 crop, had managed to be larger against all odds. That was leading us to believe that 2020 would be even larger. A lot of folks were really looking at these massive sort of production estimates and thinking to themselves, obviously, if we're going to see this take place this year in 2019, we're definitely going to see a much larger crop again, in 2020. So it felt like we were going to be stuck in a cycle of low prices forever. So we should have known better, right, that wasn't going to be the case. And so as we worked our way ahead here, let me try to get it going forward 1 second. This is what happens when you don't do. So what's happening now? China has returned in a very big way. Recovery from both ASF and COVID was much swifter than anticipated. Phase 1 trade deal, obviously there's a question here as to what that looks like. I put in 2 question marks. I'm never really a fan of question marks or exclamation points in a project or a presentation, but the reality is there a phase 1 trade deal influence or not? That's the question that we really have to ask. So there's a desire to stock up for a multitude of reasons as well, in China. Processors and feeders, we're talking about more than sufficient stocks. They want to basically continue to hold on to more and more. There in the past, you would be talking about a 2-month sort of window of stock holdings, and they really want a 4 to 5 month now. So they're really kind of continuing to take in as much as they possibly can. And then on top of that, it turns out crops in 2019 weren't as large as expected, and they were also smaller in 2020 than what a lot of folks thought they would be as well. The USDA has made 4 historical adjustments in the last 8 months, and that's not to be taken lightly. They have been very large adjustments that no one was really anticipating, that took, basically a crop carryout expectation in May of last year of 3.2 billion bushels, which would have been a historical amount, down to right now we're looking at about 1.5, with some conversations that we're actually dropping more towards 1.1. And so the USDA, basically made those huge adjustments, and we now know to expect the unexpected, which is also very fun for me and the people that are trying to help folks market through this thing. So we have what I call, this toilet paper frenzy in grain. So if you remember at the start of COVID, you went to the store and you couldn't find a package of toilet paper anywhere, and everyone really was losing their mind over the fact that you weren't going to ever get another package of toilet paper again. And probably many of you, myself included, have that little backup case of TP in the basement just to make sure you never run that risk of running out again. And that's what's taking place in grains right now. COVID has shined the light on how precarious that supply chain really is. Logistics dominate every aspect of the market as well. And so having supply but not being able to get it is just as bad as not having it. It doesn't matter if it's sitting in the middle of Minnesota. If you need it tomorrow, it's just like with your Amazon order, if it's not there, that's what you're running into. So just want to make sure we not sharing. Oh, that's why. I was thinking we were sharing screens, so I apologize for that one. So the toilet paper frenzy here that you're dealing with in grains, let's go from the current slide. There we go. Now I think we're rocking and rolling here. So basically what you were looking at is in that toilet paper frenzy, there was logistics dominating everything. The desire to have extra supplies is real and not going anywhere anytime soon. And so what happened in addition to that is China's buying surge created this frenzy, everywhere else. The idea is, what do they know that we don't? What are we missing here? Is there this idea, this fear, of running out, and what that means? If China takes everything, what does that mean for us? And you really saw that as well in the wheat market structure. Once there was conversation that Russia was going to be kind of limiting some of that supply, which exacerbated everything else. As I said, in addition to big demand, concerns over lack of supply were exacerbated by Russia, Argentina, and then the Ukraine, possibly talking about export restrictions. And so the Russian export ban and tax comes into play after February 15th. In the meantime, though, they have exported 20% more than they had a year ago. These continued massive shipments are expected again ahead of that tax. There was a video on social media not long ago of probably a 3-mile lineup of trucks trying to get the wheat to the boats. The Russian story is not over. They're really trying to work on creating an exchange, acknowledging who has what bushels where, trying to really bring down domestic food prices. And the reality is the idea that they were going to bring down domestic food prices by limiting exports kind of backfired, in the sense that this idea of limiting exports really created the farmer, or pushed the farmer to hold everything back. And it's just been this back and forth. There's an idea that now the export tax, or some of the duties that are going to be in place, will remain permanent. At first view, right, that would be really bullish, because if Russia is never going to export again, what does that mean? And the reality is it's actually bearish, simply because what that does, that continuation of policy into the new crop year, pushes the farmer to sell, or the commercial to sell, those products that they may have otherwise held back, on the idea that if they just waited until July, there wouldn't be an export tax. So there's still a news story every day out of Russia, which is also fun. You saw the Argentina farmers fight back. We suddenly had this announcement at the tail end of December but the Argentina government was going to limit exports. Now, it took place right after the strike was announced as completed. We'd seen the port workers strike really kind of create this havoc. Again, logistics, right? If you can't get it, it's just as bad as not having it. So we saw this strike of the export workers really kind of wreak havoc when it came to Argentine exports. And as a result, the government came out and kind of said, okay, we're not going to ship any corn until the end of February. And so everyone panicked that that meant they didn't have corn. Reality was they had plenty of corn. It was just far more profitable for the Argentina government to be shipping soybean meal and things of that nature. But the last thing that Argentina farmers want is to look like they are not a reliable supplier of products into the global market. So they fought back. They struck, they went on strike, they restricted their sales, they basically argued with government groups until the government said, okay, sorry, we're not going to do that. And so there's no longer any export limitations. We're actually seeing Argentina come back into the market pretty strongly from March, April timeframe on exports, which is their traditional exporting time period. There was also talk that Ukraine would restrict what was going to take place, but basically a lot of headlines. They got into the conversation and kind of agreed that, yeah, there's going to be this soft sort of limit. But the reality is that soft limit is the same as what the USDA had projected. It was the same as what the Argentina government had projected prior. There really wasn't any sort of concern that they were going to restrict what they were putting out. But that doesn't stop these food shortage headlines. We're definitely seeing food shortage conversations. We're seeing talk of global food prices increasing, and all of these things that are kind of playing into this hysteria to a certain extent. Not to put it lightly, because obviously running out of food is something that scares everyone. But it is easy to kind of whip everyone up into this mass hysteria that we just don't have food to feed everyone. And the reality is we do. Just getting it from point A to point B where it's needed sometimes can be a little bit of a challenge. Obviously, there's an inflation play component at hand. The falling dollar was acting as fuel to the export fire in the US. That's very supportive to grain prices a lot of times. A cheaper dollar obviously means they're going to export more. And so that was creating this rush into the market, the idea that the dollar was going to continue to fall. A lot of talk of the dollar falling into the 80s levels. And some of those other issues. The dollar has since rallied back after falling to 2018 lows, still hovering at lower levels seen over the last several years, but at the highest level we've been at since November. The new Treasury Secretary Yellen will be interesting to watch as well. As Fed chair, she saw incredible dollar strength, and though she says she will not manipulate currency, a strong dollar is extremely beneficial to U.S. consumers and the U.S. economy as a whole. It may not help, our exports by any means, but it definitely helps create an environment that's far more suitable for the consumer. The value of their dollar allows them to buy more, and that's super important. To me, inflation is always an interesting concept. There's this kind of idea of, oh, we're going to see inflationary pressure, we should buy commodities. And so we buy on the idea of inflation. Prices go higher because of more buyers and more interest to really get into this sort of inflationary play, and then higher prices we get, and then we're like, see, it's inflation. And so is that kind of the tail wagging the dog, so to speak. In addition to that, there's some conversation right now. One of the things that I would say growing up, I was always kind of introduced to economic theory as like there's trickle down economics, and that's it, right? And so it's kind of interesting to take a look at some of the other monetary or economic theories that you could see. And right now, modern monetary policy has really kind of worked its way into the daily conversation. And that's a question as to whether or not stimulus really leads to inflation or has to lead to inflation. I think, unfortunately, the idea is that instead of an inflation sort of standpoint to where your dollar buys less, the idea is that you tax more to kind of bring some of that money in. So maybe it's not the solution we'd like to see, but it'll definitely be something that over the next year, 2 years, 3 years, we're going to have a lot of conversations about. So looking ahead, Obviously, we're going to be watching demand developments in China and around the world. We're going to have to pay attention to what's going on there. A resurgence of COVID in China is being reported, with cities being locked down again ahead of the lunar holiday that's next week. And so the Chinese government really has limited or expressed extreme concern over the idea that you're going to see a lot of travel. The Lunar New Year holiday, a lot of times, is known as when those who dwell in the cities kind of make their way back out into rural areas and things of that nature. And so there's really a push to not see that happen. It's also been interesting to see, we had that large drop in prices a couple of weeks ago, and a lot of that was on the back of the idea that we were seeing this resurgence of COVID in China. Prior to that, I was seeing, basically the daily report on how many cases you were seeing, how many asymptomatic cases, how many deaths, things of that nature. That information's become a lot harder to find. So it's almost like deja vu all over again, in that sense that we're kind of trying to figure out what exactly is taking place from a COVID standpoint in China. They're trying to blame this resurgence on some of these other strains that have taken place, some of these mutations. And so it'll be definitely interesting to see how the country responds and is able to kind of work their way through this as we move ahead. ASF, African swine fever, is also being reported for the first time. That was kind of a double whammy that we had, this resurgence of COVID, and then this sort of announcement that ASF was also kind of working its way back in. And similar to COVID, you're seeing this mutation take place. And that was the concern. This secondary level or type of ASF was found in barns of the fourth largest hog producer in China. And some folks believe it was caused by illegal vaccines. There isn't a vaccine in China right now that will help prevent ASF in hogs. And so what you have seen is kind of been this sort of private drive to come up with something that was going to provide immunity to these hogs to this virus that is extremely contagious and extremely deadly. And so they kind of mutate or eliminated some of the genes or some of the aspects and played around with the virus itself, creating, what they thought was some level of immunity, which is probably true, but now it causes problems in breeding stock. It creates some issues with mummification of piglets and things of that nature. And so it doesn't kill the hogs outright. Instead, it reduces their breeding potential. It's still extremely contagious. And so if you have it in one barn, you're likely going to have to wipe out that barn at this point. And so it requires that euthanization versus killing the hogs outright. There's also been a couple different stories that have come out this week on additional viruses that are causing issues in the Chinese hog herd, PRRS, PEDV, some of these other things that they're really going to have to work through. You have to remember, part of the reason that you've seen such a huge increase in Chinese demand, and this idea that they were able to really kind of fix their hog supply situation so quickly, is that they started creating these multi-level hog barns and some of these other things that are super great when it comes to keeping infections out from a biosecurity sort of standpoint. But once the infection's in, you obviously have that many more hogs that are at risk. And so it's something that we're going to want to watch over the next month or two to see what takes place with that. Obviously, if it's found in the barn of the fourth largest hog producer in the country, the question is going to be just how bad is it, and when are we going to learn, what the actual situation is. We also have bird flu spreading across Asia and into Europe, resulting in millions of birds being euthanized. Just about once a week, we're finding that bird flu somewhere else. And so it'll be interesting to kind of also watch, because right now this market is based on extreme demand. I'm not saying that demand goes away, but it's super important to kind of recognize that some of the situations that we're looking at right now may not be quite as rosy as what they appear as we move ahead, if in fact we aren't able to contain some of these diseases that have figured out a way to spread. Also, in addition to all of this, how the new administration approaches stimulus, foreign policy, and monetary moves is going to be key. I said, say hi to the new boss, same as the old boss. Many administration officials are repeats from the Obama administration, especially the head of the USDA, Mr. Tom Vilsack. So we kind of know a little bit of what to expect. It'll be interesting to see what happens with this new leadership in the country, and how they're going to pursue some of these endeavors that we've been seeing over the last, 4, 8, 12 years. So looking ahead for corn in particular, and when I'm looking at these numbers, I'm obviously looking at a lot of what is taking place in the United States as a whole, but obviously what is taking place in the United States has a global influence when it comes to overall market prices and market fluctuations. And so domestic demand concerns here in the US are extremely valid. Reduced gasoline demand and concern over what ethanol production looks like going forward is going to remain in place for quite some time. Yes, we've seen a really rapid rollout of the vaccination programs. There's a lot of optimism about what that looks like, but you're still seeing an indication that overall demand is lower. Now, how much lower does that remain as we move ahead is the big question. There's arguments over whether or not business travel as we know it is out. Obviously there's going to be less people traveling for spring break and things of that nature, and to a certain extent, some of that is going to really stick around and stay in the minds of people for quite some time. Also, obviously, if any of you are feeding animals, you understand that your cost, your rate of gain just went up substantially with the corn prices increasing, with the wheat prices increasing, meal and canola prices increasing, and so what we're seeing here in the US is that cattle placements and animals on feed is high, but we're starting to see breeding stock work its way towards the packer instead of being held back. We're seeing a shrinkage in the calf crop. We're also seeing less hogs, broiler margins, egg margins, hog margins are all low, with animals on feed likely to be reduced. One of the things about birds and hogs, obviously, is that you can kind of throttle back and increase a little bit easier than you can with maybe cattle, but it will definitely be something to see. I know for me, in particular, my hog feeders right now would typically be buying X amount per month, and they really have kind of throttled it back quite a bit. My cattle guys are saying to hold off. They're going to try to work through some of the inventory that they have on hand before they start buying some additional bushels, and maybe they regret it, maybe not. I mean, it's really going to be one of those things where if I could get into a time machine and just kind of leap forward to October to see how this year finished out, I think it would be extremely beneficial for my sanity as a whole. But export sales, are incredibly large, but shipments continue to lag that pace that's needed. Excitement over export sales remain. And in corn in particular, though, one of the questions that we're really running into is that until the bushels are actually shipped, that fear of cancellation, can really loom as a whole. And so what your biggest concern is obviously is if we have a bunch of bushels sold and we're relying upon all of this sort of shipment to take place, unless they're shipped, that cancellation fear is there. And honestly, out of the entire marketing season that started on September 1st, we have only hit the level needed to meet those export expectations once. And so it's definitely going to be something that we're going to have to watch. Is there a possibility that some of these purchases have been made, simply to try to cool the cash prices domestically in China? Is there an intent to take it? Is there an idea that they're going to arb through that? I mean, there's a lot of really large questions at play as to how that works and how COFCO works as a whole when it comes to reporting the purchases they're making and where they're going. New crop acreage in corn is expected to be large. The American farmer loves to grow corn. Most private, especially if it's $4.50 on the board, and folks are talking that it's working towards $6. So some recent private estimates have indicated that 94 million acres of corn could be planted, with some projecting even higher levels than that. I think we saw a private analyst with a larger firm recently put out a 97 million acre corn planting projection. Obviously production's not guaranteed. Mother Nature is really going to have the final say on that. But an increase of acreage is definitely not something that we can just kind of bury our heads in the sand and think that we're going to see a repeat of 2012 or something like that. Looking ahead for beans, obviously that massive export demand cannot be ignored. Sales continue to be larger than expected. This morning, everyone was really excited, though, about our export sales number and this large China purchase. But the reality was the majority of that was just switched to China from unknown. However, you're still seeing sales come out larger than expected. Honestly, though, as someone who manages a physical position, I'm amazed that commercials continue to sell beans. You don't sell something you don't have unless you have a death wish or are looking to start a new career, which after the year we've had, I wouldn't blame anyone for being some of the latter versus the former. But it's really interesting to see, again, going back to that conversation about how COFCO reports, because there is some talk that there's certain companies circumventing reporting rules. COFCO, specifically Grain, COFCO has a stake in some elevators along the river market. They have a hand in some private companies here in the US. And so there is a question or a concern that, there's some potential talk that if COFCO is buying US grain, that it's automatically going to China. The question is whether or not that's the case and whether or not they're taking advantage of loopholes. This has been something that has really come out over the last week or so after last week's huge corn purchases announced to China, and that the physical market, the cash market, didn't move. If we were to truly sell 6 million metric ton of new bushels in 1 week's time, you would have seen explosive moves on the basis standpoint in both the PNW and in NOLA, New Orleans. And we didn't see that. And so people started to ask questions, and now we're starting to see, that there could be some level of concern there, that Scout's honor is being ignored. Ending stocks and stocks to use ratios are incredibly tight. There's really the idea here that we're falling sub 100 million bushels, which is extremely tight, and a level of concern. Now, there's obviously room for adjustment. Demand right now needs to be increased. We can't ignore that. You're going to be looking at an increase in crush demand likely and an increase in export demand being necessary. But we at one point in time in 2013 ended up getting close to 90 million bushels of imports. We are set up to import into the Southeast, import into the Gulf if needed. I mean, obviously, if the price gets high enough for some of these processors, instead of shutting down, they will figure out a way to get those bushels from where they are to where they need to be. And that's the last time we were in a similar supply and demand situation. We did see a significant increase in beans that were imported into the country from other locations. I think Canada as a whole is definitely going to be struggling with protein supplies at this point from a canola and soybean standpoint. So in the past, I think we had seen some beans work their way east potentially, and that's not likely, or excuse me, west from Ontario, and that's not likely to happen this year if needed. The other thing in the USDA is negative residual usage is real and it's fabulous. There's 20 million bushels there. There's this residual usage category in both corn and soybeans, and that's more of a fluff factor. They can massage it as needed. And right now the USDA has residual usage around 20 million bushels. And in the same year that we saw that large increase in imports, it ended up being a negative demand number, which still blows my mind, but it's the USDA. And so what that does is, in theory, just adds back in another 30 to 40 million bushels, from a negative residual standpoint. So it's something that we'll definitely want to be paying attention to. In addition to that, right now, it does appear as though the South American production's demise appears to have been greatly exaggerated. In December, Drought Talk had a lot of folks anticipating the crop to fall. I heard some estimates as low as 125 million metric ton. Most folks were in line with that 128. Now it appears that the crop will be somewhere between around a 130 to a 133 or so, which is about 4.8 billion bushels at 132 million metric ton. And so there is going to be a large amount of beans that will eventually make their way back into the market. Of course, right now, southern Brazil has been dealing with some wet weather, but now that's turning drier. So that should allow for harvest. But this just shows you how excited this market is to run prices up. Right now at the start of the week, all of the conversation was really kind of focused on piranha and how wet it was and how it was damaging their soybeans and how they needed drier weather for to really kind of get harvest rolling and get going. Well, now we're rallying because of the idea that there's going to be drier weather returning to South America, Argentina specifically, for the next couple weeks. Argentina really had picked up about 3 months worth of rain over the last month. And so right now, as long as temperatures stay cool, they could kind of handle a little bit of a drier spell to help reduce disease concerns and things of that nature. So what does it all mean? The idea that we're in a long-term cycle of low prices is likely behind us. We're back to trying to really kind of work our way through what could be a bullish market for an extended period of time. Obviously, population growth and protein demand is not going anywhere. COVID and its effects on mindsets regarding food supply is going to be long lasting. It's just like you're going to have that extra case of toilet paper in your basement probably for quite some time. We're going to see other countries really kind of make sure that they are also, maintaining that extra sort of supply of food and making sure that they don't get caught again, with these shortages that we had seen, even if they were acute, throughout the summer and last half of 2020. Volatility is going to be the word of 2021. Outside investors are going to enhance any type of market move, both higher and lower. So you can really see some explosive moves to the high side, at times that you may not necessarily anticipate, but then you'll also potentially run into explosive moves to the downside if something, somewhat shocking were to develop when it comes to this whole entire idea of extreme Chinese demand. There's too many unknowns. A lot of people right now have an extreme level of confidence about what they anticipate the market to do in the next year. To me, I feel like there is way too many unknowns to have any type of confidence in a price or supply and demand sort of outlook. You have to be prepared to really see it be all kinds of different levels, varying levels. And it's too early in the year to have a really big or good idea over what will or won't happen. There's danger, in my opinion, in consensus, especially in this industry. So it seems like once everyone is fully confident in what to expect, that's when things tend to change. So we'll want to be watching, what happens here over the next few months, especially when it comes to shipments and new developments on the China side, South American production, things of that nature. And so to me, it's really important to kind of focus on improving your approach to marketing instead of trying to nail these market moves. And so what makes a good marketer? I work with hundreds of farmers, both in Michigan and across the country into Ontario, talking to several each day. We go through the ins and outs of making a marketing plan. I experience the emotion and what drives a lot of these decisions firsthand. And through this, I found some really extreme common threads that tend to run from farmer to farmer. And some of those are good and some of those are bad, and I completely understand it as well because I manage my own position. I buy in grain at harvest time and I have to figure out when I'm going to turn around and sell it, how I'm going to manage my spreads, all of these things. And so I can kind of feel your pain when it comes to trying to make a marketing decision based on what's taking place in the market structure and not knowing, what you need to do. And so biggest thing is what not to do from a starting standpoint. Stop always looking for a scapegoat. There's this sort of common theme that runs through certain marketers where it's not my fault. You told me to sell too cheap. The USDA didn't give the right information. My dad picked the wrong seed variety, something of that nature. There's always some level of looking for a scapegoat. Make sure that, you don't put all of the blame on yourself because that's absolutely not necessary. Reality is there doesn't need to be blame in anything. And so make sure that you're not getting caught into this constant circle of blaming someone or something for maybe what is simply bad luck. Flying by the seat of your pants, just making decisions as you need to make them, or allowing emotions to drive your decisions tends to be a very bad form, whether that's getting overly euphoric when the market moves higher and thinking that it has to continue, there's no way it can stop, or the opposite is true, getting into a feeling of depression or panic when the market starts to move lower and really kind of, then making large knee-jerk decisions based on that. That's something that's definitely very detrimental to success as an operation. Make sure you're not getting yourself overwhelmed with analysis. So it's very easy to constantly be looking for things, especially when you're not understanding what's taking place in the market. You know, you're on Twitter, you're getting a ton of newsletters, you're talking to a ton of people, you're watching every Saturday morning TV show that you possibly can, and suddenly you're just so overwhelmed with information that you fall victim to analysis paralysis. So make sure that you're really kind of limiting to a certain extent some of that flow of information, you know, just to really kind of cover yourself and keep your brain from getting fried. And the biggest thing that really frustrates me when it comes to working with someone on improving their marketing is this whole saying, you're not smart enough to learn something new. Well, I can't learn that. I'm not smart. And the reality is you don't have to be smart. I think I'm a testament to that. You don't have to be smart to be good at what you're doing, but you have to be willing to learn and improve and you know, slowly get better at what's taking place. So what is that biggest component to success? Having a plan. You know, for me, my successful marketers have an idea months in advance or what they're going to plant. Of course, Mother Nature can always change that plan, but having a general idea of cost structure, you know, and knowing that that's not the only factor. You know, obviously you're looking at rotational benefits and some of these other things, convenience, you know, and so you have to really kind of look deep into some of the benefits that might not be easily identifiable, but you're able to really kind of build a plan that can roll from one year to the next. And the biggest thing this does is it removes this chicken in the yard mentality. You have chickens in the yard, you throw a pile of corn one way, they all run that way. You throw a pile of corn the other way, they all run that way. You know, make sure you're not doing that in your marketing, because that's extremely dangerous and extremely detrimental long term to your operation as a whole. Have an idea of your costs and the factors that influence them. You obviously need to know your cost structure, and because that provides you, once you know your marketing above your point of profitability, it really provides you a level of comfort, you know, when it comes to marketing that production. And if you have an idea of what your costs were the year prior and what they are looking like now, it'll give you a level of comfort when booking those inputs, you know, maybe far in advance as well. This also provides an ability to make deferred sales at profitable levels, giving you a long-term peace of mind, and it removes a lot of that emotion out of your marketing because you're able to spot that point of profitability and have a general idea of what you're looking to accomplish price-wise, you know, to really have that successful marketing plan. So in addition to having your plan, you need to know your plan. Have a general idea of those costs, those bushels likely to produce, or at the very least, what your acreage breakdown is. Know what needs to move when, know what type of percent you are contracted, you know, really based on your normal production at any given point. Have a general idea of what your point of profitability is, and then don't be afraid to have pricing targets both written down and entered in with your grain buyer. You want to build a team of trusted advisors and friends, find people you can talk to and bounce ideas off from. Farming is a very isolated industry, so make sure that you're not in a situation to where you're allowing yourself to be completely isolated from folks that are in your peer level and beyond. Find a nice mentor if you can, you know, and really work to build a peer group, you know, both in person and virtual. I'm a part of a virtual peer group right now that's been extremely beneficial to me as a whole, and I feel it's been extremely beneficial to the farmers that are involved. You want to build those relationships as well with your local buyers and suppliers that allows you to have an open line of communication with people at both ends of your business. If you feel that you're in a detrimental sort of relationship or something that's not benefiting you when it comes to your buyer or your supplier, make sure you're also looking around a little bit. There's nothing that stops you from finding someone who can help you and help you be comfortable in the decisions that you're making. Make sure you're scale selling. No one is ever going to nail the high of the market with anything but luck. Now, granted, I'd rather have luck than skill any day, but also make sure that you're not trying to nail 100% sale, you know, at what you think is going to be the high, because most of the time you're going to miss it, and then you're stuck trying to figure out how to market as the values fall off. So start with a small percentage of the crop at your point of profitability and continue to sell as the market moves higher. You can adjust targets. I like to have pricing targets outlined, you know, really at the beginning of your marketing program, just so you have this general idea. But obviously, if information or the outlook begins to change, you adjust those targets. This year, you know, in past years, the past couple of years, having the majority of your corn sold for new crop between 4 and 425 was really the best way to go about it. Now, obviously, we've traded to 450 and 460. So a lot of my customers that may have had a larger amount of bushels hedged at that 425 range, we adjusted those targets higher. We made the amount of bushels that we're selling a little bit lower than what they have been over the past few years because the outlook has changed. There's a lot more risk to upside at this point than there is to extreme downside. And so all of this always comes back, to really having a plan. So in the end, just kind of be aware. Successful marketing really does take a level of constant effort and awareness, not so much of having to constantly be in tune to what's going on in the market structure, but always being somewhat aware of what is taking place for your operation as a whole based on, what the current situations are. Old habits aren't always bad habits. So you can take time to look over what it is that you're doing. That doesn't mean that just because you don't feel as though you have been successful as a whole, that doesn't mean that you're doing something extremely wrong. Your habits may be good. You have to be able to have that sort of ability to look at what it is that's benefiting you and what's not. Obviously little changes can have a big effect on what's taking place. Maybe that's just having standing targets with your buyer. Maybe it's just writing down your plan. Little changes can have a very big effect on what you're doing. So focus, like I said, on what's currently taking place in the market structure, how it affects you and your operation. I just noticed a horrendous grammatical error, and now I'm going to have to run away. But don't get bogged down with trying to nail the high. The English major in me is cringing. So the level of uncertainty in the year ahead, all coming into full circle, the level of uncertainty in the year ahead is unprecedented. And so really when it comes down to it, remember you're in business to be profitable when opportunity arises. And again, I'm going to point out you're not trying to nail the high. And so what tends to happen in a bull market is we get so caught up in not wanting to miss out on opportunity if the market moves higher, because that's really the worst thing, right? No, in reality, the worst thing is missing what is a profitable opportunity and having to figure out how to sell at a less than profitable level later on. And so make sure that you're just really aware and comfortable with what's taking place in your operation and make smart decisions accordingly. Contact information is here. You can email me at asetzer@citizenselevator.com. You can find me on Twitter at Goddess of Grain, or you can go ahead and check out my blog because it's the year 2000 in my life. It's businessendoffarming.com. So that's it.
Okay, wow, that was a lot of information. But we have some questions. So I guess to start, do we see anything potentially happening in the commodity markets like what has happened in the stock market lately?
With the retail investors coming in, I think there's always that sort of concern that you're going to see this big move higher in this run up. I think what we'll find in the stock market, like GameStop and some of these others, the silver squeeze and some of these other things, I think you'll find as time goes forward that a lot of this concept of this being purely retail investor driven actually had some level of large money behind it. We saw this morning an article come out where a hedge fund had actually made $700 million on the GameStop move. And so you don't make $700 million with a handful of shares of GameStop that you spent $20 on, you know what I mean? And so I do feel that we perhaps put a little bit too much emphasis on the fact that it was the retail investor pushing it. In addition to that, in grains, one of the risks that you run into is taking delivery, and you don't want to take delivery of several contracts of corn on the river in Illinois in February. And so I think it gets there's a little bit more of a cost prohibitive nature, of just simply going long. Now, could you see them get into some ETFs or something of that nature? You can get on Robinhood and buy pieces of the corn market or buy pieces of the soybean market. And so that is possible. In fact, that's really what kind of started this move higher in August and September. If you go back, I had someone message me on Twitter and say, hey, my ETF chat boards are all talking about getting long corn and soybeans. And so you did see some of that speculative interest come into the market via that. But I think there's a little bit more in the way of hindrance to the market as a whole, that'll keep the Robin Hooders maybe from attacking the commodity markets.
Okay. The next question is, how do you maximize on-farm storage profitably with very little carry in the market?
You don't. You pray to the gods of basis that they pay you to hold it, honestly. It's a little bit of a nightmare with no carry. I mean, the market structure at this point in time is very limited from a carry standpoint. Yesterday, I traded a chunk of my wheat that I'm carrying forward at 2.5 whole cents worth of carry. Doesn't even cover my interest charges. And I would love to tell you that the basis gains offset it, but it don't. So I just get to hold on to wheat for no apparent reason. And so that's really one of the things to be aware of in the market is to be having these conversations about when your buyers are going to need bushels later on, and make sure that they're trying to build a level of carry into your basis. And if they're not able to do that or guarantee that for you, there's ways to stay long paper and get rid of that physical if it's not providing you with enough ability to really kind of have profitability and holding on to it. If the market's telling you to deliver bushels now, you might as well look at doing it, or be willing to kind of roll the dice and see what you can do to make up some of that loss and cost, later on.
And I guess we have time for one more question.
Okay.
So we are all expecting commodity prices to soften. As you mentioned, inflation is a hard one to nail down and making it difficult to recognize a good price. So an example of this would be, is the old $5 wheat now $6 wheat? And kind of what are your thoughts on that?
Yeah, that is the $1 million question. I've been doing this for 16 years now, and I think this is my third inflationary trade. And so one of the hardest parts about inflation as a whole when it comes to food production is eventually, one, your high prices cure high prices, right? So eventually you're incentivizing production increases from around the world. And so you can say that there's no more land, but Brazil basically has our entire corn belt that they could bring into production if necessary. Now we can argue that environmental concerns and things of that nature would stop them, but with Bolsonaro in charge, that's probably, unlikely. And so eventually, the increase in supply tends to offset some of this concern over lack of availability. It also starts to kind of remove some of that level of demand that may become or may be viewed as unnecessary. I'm not saying it's unlikely. Obviously, when I started in this business, sub $2 corn was quite common. And now sub $3 corn or sub $4 corn, sub $3 corn is really somewhat unheard of. And so $2 corn has turned into $3 corn. What was $5 soybeans are now $8 soybeans on the low end, and wheat should stay supported around 5. So there is a certain level of price increase I think that you see will remain in this market structure. Question is whether or not you always see $6 wheat. I'm not sure. It's going to take us in 5 years. I'll be able to answer that question accurately, at this point. But I would say, as a whole, you're going to start to see a lot more people complain about the cost of food increasing and trying to figure out ways to fix that. And so there's going to be a lot of conversation over the next 6 months over what is actually taking place from a food supply standpoint in the global pipeline.
Good. Well, thank you again, Angie.
Thank you
If
for
anyone
having me.
has any questions, we'll pass them along to you, and then we'll get the answers back out to them. So
Sounds
thank
great.
you again for joining us from Michigan. Hopefully it's sunny there like it is here today.
It is for now. They were supposed to get that storm this afternoon, so it'll be fun.
All right.
So thanks for having me. Have a good day.
You too.